Hello, Mark Sturdy here with another summary of our work this week. And if we look at the summary page, you'll see that we have recognized the dullness of the currencies, no question about it, although there are things to say about sterling, euro and dollar yen in particular. We have pulled back from our anxiety about stocks, and we've gone bullish again of the Euro Stoxx 50 and Nikkei 225, notably flat still with a question mark over the S&P 500. We are holding our ammunition for the bonds, even though there are interesting levels there to watch. Oil, we've gone bearish on in the two time frames at least, and gold we are watching very closely because there's an important support. Let's go straight to dollar euro, which will reveal, in fact, the dullness of the market. Overall, we're bearish of the dollar, bullish of the euro, insofar as the market can't break down. But for the moment, we are waiting for the market. If it can get above 1654, that would be exciting. Nothing at the moment. We do urge you to look at the dollar yen, which good patterns are driving the yen weaker and the dollar stronger. Notably, this triangle pushing through this prior high. Another triangle here, which is completed and pushing the market up yet still further above 170, we think. Wait for a break of 160.83. And yet another triangle, smaller, here, which suggests a 164. But once again, we're waiting for a break of 160.27. All those levels are very close. Watch them carefully. And sterling euro is worth keeping an eye on. Very close to this level, 116.11, 116.12. A break up through there, weakening of sterling, a strengthening of the euro would be, I beg your pardon, strengthening of the euro, sterling, and weakening of the euro would go further. Watch that. Interesting. Those are weekly and long-term charts. On the day chart, a break up through 116.01 would be exciting. Stocks, we have noted that the S&P 500 is broken into new ground. The FTSE 100, slightly less excitingly, but nonetheless, in the weekly futures chart, has potentially completed a bull continuation triangle. Watch this level here, 105.72 for a short-term trigger. The Nikkei 225 is very rampant, going into new territory, breaking up into new ground here. All of those are exciting. Compare and contrast with the S&P 500, which has struggled to make new ground. Here we have it bouncing up, almost a key reversal here. Notably, a weekly key reversal, which we got about a bearish weekly key reversal here, which hasn't been totally negated yet. So watch this carefully. The muted rallying in the S&P may go further, or this weekly key reversal may start influencing the market and drive it on down. Watch that with great interest, I suggest, notwithstanding the bullishness of the Euro Stoxx, the FTSE and the Nikkei 225. Bonds. Quiet American market, unable to break down bearishly in price-wise in this triangle, which should be closely watched. A breakdown beneath 109 would be important. For the moment, it's been rallying, maybe found good resistance at 110.01. Watch this carefully for a break up through there, short term. But remember still this long-term potential bearishness if this triangle were to break. The German Bund is similarly, arguably, still bearish insofar as it has to break down through 288 before the yield bulls, price bears, can be comfortable. Or rather, shall we say, the yield bulls would be discomforted by a break back down through here. For this, we think the market remains bearish. Watch this short-term market. A break above 126.52 would be a relief for the bulls, driving the prices higher. Watch this short-term for guidance on the longer term. Gilt. The bear potential remains in the monthly chart. The failure of this suggests nothing is going to happen bearishly, bullish for yields, bearish for prices yet a while, since it's fallen back within this triangle. Watch this. If the market can get above 88.98, the price bulls will be excited, and equally a breakdown beneath 479 would be bullish for prices, bearish for yields. Oil, we think it's completed a bearish head and shoulders top, therefore we think it goes lower, down to 70. And the gold, well, it's still dithering around this level. If the gold can't hold above this neckline, expect it to go a lot further. Looking at more pessimistic daily closes, the market has to go a lot higher before it can get rid of the massive resistance here. So that keeps the pressure on the downside. Thanks very much.